under Trading Newsletters.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 25th, a wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, and I do mean perseverance. Absolutely great to be with you. Hope you're having a great day. Let's make sure we have an extraordinary day. And the easiest way to do that is to always remember that life is happening for us, not to us. I know it's hard to say that right now, but it is happening for us. When you and I can learn that tool out there, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to give me a call, 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com, and inside our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on a wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up over 1,000 points, 1,073, 5% to the upside. Now, that's a positive statement when you actually, and we talked about this yesterday, when we have the Dow percentage-wise leading the charts. I don't care if it's weighted and it's Boeing, it's this, it's that. You see, because the Dow is the trophy horse. What we want to be able to see here is we want to be able to start seeing money move from money, just the big, huge ball of capital around the globe that's trying to figure out where to park, to begin parking itself inside U.S. equities, where it had been parking itself inside the U.S. dollar index, Treasury bonds still flat, up just slightly out here. So it's okay that the Dow is the leader percentage-wise. In fact, that is a good sign. Now, you've got the New York Stock Exchange up 5, and it's percentage-wise, New York Stock Exchange is actually leading the charge. Oh, of course, just slightly behind the transports, up nearly 7% out there. So we've got mean and green across the board. What you and I have got to try to figure out, is this just a 2-day knee-jerk reaction or a 3-day knee-jerk reaction? We're going to have to go take a look at that. But what we do have going on, well, first let's look at this. What we do have going on is a global worldwide rally. And we know that just simply by using this tool here. We can take a look at the instruments from around the globe. I use these instruments here specifically, which are ETFs that you have access to and that you can track. Now, maybe you can't track it and determine how each instrument is trading in terms of euros, yen, pounds, or whatever currency it is you want to track. I track those three plus the U.S. dollar, and the lead the charge over the past couple of days out here, percentage-wise, it's North America, it's Canada, up nearly 23% in terms of U.S. dollars out there. Just behind on a percentage base or rate of change basis, Brazil, that's up 21%. The diamond's up 17%. But you can see here a global rally across the board over the last really 2 trading sessions, such yesterday and today. You don't see that as being the case inside of Treasury bonds. Okay, so that's good. You certainly don't see that same percentage in terms of gold. So that's good out there. So you've got this worldwide rally. Now, what we're going to be watching today, what we should be watching today, is are the tops of these daily profiles. So what we can see right now, and John had asked a question, do I think that the S&P can continue moving higher somewhat uninterrupted until price gets to, well, hold on a second here. Let me see, I have such a small little window there. The question was, could it run up to 2651 without interruption? And so right now, John, the first interruption that you and I, all of us, need to be looking for and watching is going to be the top. What the heck is going on there? Man, that was weird. Is the top of its daily profile. And that level is 2540. 25.40. So, and what I had mentioned, so we now have price attacking, the ES Mini that is, attacking a resistance level, 25.40, and on a 30-minute time frame base, what we see inside the ES Mini is it's possible that it's forming a TD 9 count. Now, it's got the confirmed 9 count. The high can come on bar 8, 9. In this case here, it'd have to be the bar after 9. And we can see the price moving higher, doing less relative energy out there. Now, in order for this pattern to take place out here, and the one I would put the priority on would be the Rhodes Momentum Indicator signal, we need to see some type of bearish reversal pattern. Candle, not pattern. If we do get that, John, that says price is going to pull back. First level to pull back is Stevie's red-green line. It's at 24.77. The next level would be 24.42, the top of the daily profile. And then really the final levels would be 23.93, 23.98, and 24.09 out there. So we're coming up in resistance on a daily basis. We are coming up into a potential topping pattern on a 30-minute basis. So we really need to see what transpires here over the course of the next maybe half hour, something along those lines. But if those patterns don't slow things down and price is able to close above 25.40, well, then that's going to suggest that this rally, bounce, counter trend move, however it is you want to classify it, that that it has more room to the upside out there. We can take a look at what those levels are. But so last evening, the markets moved higher into about, I don't remember the exact time now, my mind is foggy, around 12:30, something like that. And if you're wondering, and actually it was before the bill was announced or what have you, before they had agreement. And if you're wondering why did price stop where it did, it stopped where it did because of that powerful NQ. The high of the day, which was at about midnight, 12:30, sometime right around there, it lasted for just a brief few moments. Price got up there, said sayonara, see you later, baby, and then continued moving back, and we'll take a look at those back places out there. But it is that, and that is really of all the resistance levels that are out here. Yeah, we talked about the ES Mini testing its or maybe getting up towards its resistance level. It's the NQ that's the one that I'm watching because price really stopped right there. Now the top of the box on the NQ is 77.59, and the actual high 77.58. That's close enough for us, and it tells us, or it shows us. And if we take a look at the profiles, you don't know this, but I do, that the profiles in the case of the Dow and the Russell 2000, which are now above the top of their profiles, they were above the top of those profiles while the NQ was just getting up the top of it. So I believe it is the 77.59 area that's going to be probably the answer, John, to your question with regard to continuing to move higher to any target that you might have out there. So these are the two areas to watch, 25.40 and 77.59. I hope that helps you out. Let's go to our first caller, Dave in Framingham, Massachusetts. Dave, thanks for calling. Thanks for holding. How are you doing?
Hi, Steve. Thanks. Steve, there's a gap at 3,300 on the S&P. I don't know why the gaps are always gaps, but do you see that getting filled? I've always seen these gaps get filled somewhere on the S&P there. The daily
what's the level that which one are you looking at?
3,300 on the S&P 500 SPX.
Got it. Yeah. I tell you what, we're just about to go to break out there.
That's fine.
So if you're kind enough, if you could hold on through the break, we'll take a look. You bet. We'll go take a look at the S&P 500 with Dave in Framingham, Massachusetts. He wants 3,300 out of this, which will eventually get there. The question is when. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 1103, S&P 96 points. We're on the line with Dave in Framingham, Massachusetts, and his specific question is about and there's a lot of gaps if you were to take a look at the S&P 500 chart out here. Dave was focused on the one in that 3,300 level, which is basically he's looking. Well, in essence, the question is, will price really get back to the highs? Isn't that really the question, Dave?
Yes, it is.
Yeah, and so I do believe that it will. I don't have the timing for you on that. I do believe that we will see the global. So over this move to the downside out here, and what I'll do. So I'm going to give you the reasons why I believe that is the case. Why what I'm about to say is the case. I'm just going to put up the U.S. dollar index, and as the market was this is a monthly chart. Let me get the daily. As the market was really crashing last week out here, and we're going to just start from, of course, crashing for more than a week. But this is the daily time frame, and if we take a look at from March 10th all the way to the high just a few days ago, what we saw the U.S. dollar index move to higher ground out there. And what that was communicating to me, this is my interpretation, this was global capital that was saying, I need to find a place to park, and I'm going to go ahead and park inside the U.S. dollar index. What that then, because it was the only instrument that was moving higher, the only instrument that was moving higher was U.S. dollar index. And so that was telling me, I believe that was telling us, Dave, that big capital was saying, I still have comfort in the U.S. Now, what that then means is that it will have comfort in the U.S. and it will also have comfort in U.S. equities, blue chip stocks, the Dow, which was why I said when we start to see the Dow on a percentage basis lead, granted, we've got the weighting structure and Boeing has had a big, huge move or what have you. It doesn't matter. There's still global capital telling you and I that this is where it has confidence. And so I do believe that it will get there. Do I believe that we've just made the bottom and price is going to move higher? I don't think so. I think there's a ton of caution out here. And the ton of caution, really, what I want to do, it came from a question from one of our denners, Jimmy D, who was really asking about the spot volatility index. And so, Dave, do you use the spot volatility index at all to help you
No,
assess?
I don't. No.
You don't.
No, I
So
use the volatility index.
yeah,
It
okay,
got
yeah,
up around about 80 not too long ago, I think.
yeah. So here's a bit of caution. If you, I don't know if you're able to see us on Tiger TV, or you can catch the replay of this when it gets posted.
Okay.
But this is just the simplest use of using the VIX, the spot volatility index, and the way that this is used on the boxes on my screen. The yellow ones tell us when the spot volatility index is below the 50-day exponential moving average, and the green. I'm sorry, when the spot volatility index is above the 50-day exponential moving average, that's the yellow boxes or rectangles. And the green boxes, rectangles, are when the spot volatility index is below the 50-day. So I don't really care what the price is. I don't care if the 50-day moving average is 39.15 as it is right now. I just care where is the spot volatility index trading in relationship to that. And then I convert that, meaning not to whether there's fear or not, whether there's liquidity or not. And when you take a look at these boxes, the Dow tends to rise, or the S&P tends to rise or move sideways when the spot volatility index is below its 50-day, and then just the opposite. And what this tells me is this is really all about liquidity. And right now, you've got the spot volatility index at 60, basically at about 61, hasn't moved much. And that is the fly in the financial ointment right here. If it were back below the 50-day exponential moving average, I would be much more comfortable in suggesting to you that this is more than a 2-day bounce or a 3-day bounce or along those lines. So there's still some dislocations that are out there in the short term. And the reason why we can say short term is because you and I can go take a look at the spot volatility index trading right now at 61.15 versus all of its forward futures contract. Let me get rid of the March contract. That has expired. And if we start going out to August, September, October, those are trading in the 27s, the 29s out there. So we've got this backwardation that is in place out here that eventually will resolve itself. But so my answer to your question is yes, I believe the S&P will eventually get back up to those levels and beyond. The question is, when does that move start? And even though I can somewhat justify that it started a few days ago, we don't have enough signals, in my opinion, to prove that. Does that make any sense to you?
Yes, it does. You're right. I believe we made the low 3 days ago when we're creating a V shape here on a daily chart on the SPX.
Sure. So let's go take a look at that. No, let's go take a look at that because your statement is absolutely correct. I'm going to put up the ES Mini here for you instead of the S&P. Okay. It's going to look the same. And the reason I'm going to do that, I'm going to see if I can fire up my profiles out here on this chart. But and it's easier for me. Oh, good, they did fire up. It's easier for me to put a instrument on a line instead of a bar type or a candle type of a chart out here, because then it really clearly shows what you just said, which was the V-shaped bottom. And in V-shaped bottoms, how do you know if you've got a V-shaped bottom that's going to continue to hold? Well, one of the things that you can use is price been able to get above a prior swing point? Well, that prior swing point close that we're looking at is March 17th. And that level on the ES Mini is 24.85. Now, the reason that I put the profiles up here, and those are the yellow lines, and I'm just looking at the top of the profile, because price must close above, in my opinion, the top of a profile if this V-shape pattern that you're looking at is more than a counter trend rally. So right now, the ES Mini is trading right into resistance. See, if I put the S&P 500 on this chart out here, I couldn't provide you with that information. So you really need to watch 25.39. If price can close above that, then that would suggest that maybe price is going to run up to the next swing point area on a closing basis. That would be March 13th, and that would be a price point of 26.84 out here. If we take this chart, let me see how far back I can take this on a daily time frame, so it'll still give me profiles. I probably can't, well, I'm going to try taking it back into the 2008 time period out here. Well, let's just take a look at I can get back to that area, but it's not giving me the profiles out here. The easiest way to understand, I think, to visually see those V bottoms is to put your chart, oh good, we've got it, is to put your chart on a line chart, and then just look for those swing point changes and watch to see if price is able to take out those levels. These, I'm still using the daily time frames out here, and they really act as resistance, even when you can see these little V-shaped bottoms. For example, back in October of 2008, we saw what looked like a nice V-shaped bottom. Price closed over just for one day. It can't be. It's got to be more than a one-hit wonder out there on November 4th. Then price got right back below it and continued to move lower out here. So that really could be kind of a signal to be what we're looking at right now today. Even if we get a close above it, it's got to hold that level, the top of that profile, come tomorrow. Does that help? Does it help you out?
Yes, it does. Yes, it does. You've answered the questions.
Perfect. Okay.
And you're very good, Steve. Thank you very much.
You bet. Thanks so much for the call. You bet. And we'll get back in. We're just about to go to a breakout here, and we've got a caller on the line. We got Brent in Martinez, California, so we'll go take a look and speak to him. And, of course, we'll check out some of the other questions that we've got inside the Tiger's Den and by email. This is Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up about 1,100 points right now, S&P 97. Let's go out to Brent in Martinez, California. Brent, thanks for holding. Thanks for calling. How are you doing? How are things out on the West Coast?
Well, thank you very much, Steve, for taking the call. I'm doing very well. Good. I hope you're doing the same. You sound like you're doing better.
I am. The shortness of breath is starting to subside a little bit. Last 2 days doing the show, man, it just totally, you wouldn't have known it, but when I was done, man, just totally wore me out. So feeling pretty good so far, knock on wood.
We definitely appreciate that. You're a trooper for hanging in there. I know it's not easy.
At an early age, I remember my dad taught me a lesson that's just really kind of stuck with me. And it was when I had previously been sick and stayed home from school, and then I wanted to go out to play or something like that. And he just taught me. Now, this is not necessarily a great lesson to pass on to everybody. He said, "Hey, if you're not feeling well, go jump in the shower. Try to wash. If you want to go out and play, you better be able to go out to school or go out and work or do what have you." And so just kind of, so I use the showering method a lot when I'm not feeling good for whatever reason. And I've got a sauna that sometimes I'll jump into as well, just to try to sweat this stuff out of there. But in any event, let's take a look at. You wanted to look at gold. Why don't you tell everyone how we can help you, what we're looking at?
I did have one quick comment that this is, I think I've been around a fair amount of, pretty dramatic markets, the dot-com bubble, housing debacle. This one I'd say is probably the quickest I've seen, and just as far as giving you amazing buying opportunities. I hope, people out there take advantage of it. I tried to as much as I could. And
Sure.
I have stocks that have doubled in 5 days. So there's stuff out there that's pretty amazing, and I hate to see the damage that was done. I think a lot of people have been hurt by it. I hope they come out of it okay.
Sure.
But there's really been some amazing. Out of this, even though it's been a pretty awful thing, there's been some pretty amazing opportunities, and I do hope that people have, tried to take advantage of it as much as they can. But
sure.
I did have a question about gold. My general thought was, and my question was about that it's been up to that 1,700 level. I guess it's, there's the one time it got to 1,704. It's tested that a couple times here in the last couple of days. You look at what it did off of that previous time up there. It came down hard. I just wanted to get your thoughts if you thought this might be another, potential, kind of secondary top in the thing where it might pull back again. Maybe not quite that dramatic, but something like that.
So it seems very plausible that the answer to that question would be yes, at least as far as a pullback. If we look at gold priced in dollars, euros, and yen, we can see that each of those really got back up to their highs and have since pulled back. So a failure to really bust out those highs. That is not the case with regard to gold expressed in pound sterling. So we have to kind of put that off to the side. So just from a technical standpoint, I can certainly see that. The question becomes, where is gold going to pull back to, or what are the levels of support that it would need to bust through to keep on making that move all the way back down in the 1,400 area out here? And we've got to take it one step at a time. The first level of support that I would identify is right around the 1571, 1579 area. Now, 1579 happens to be the oscillator and change line as we speak, and I've got a profile level at 1571-ish out there. So that may be support. On a short-term basis, if gold is going to reverse downward, then the one thing that I do know is that key levels of support, and by key levels of support, Brent and other folks out there, I'm looking at a 30-minute time frame. I'm using the TD9 count levels to establish the breakout areas. And in order for gold to suggest that it's going to get back into that 1,400 level, we need to see these breakout levels begin to fail. And price is well away from that area right now, which is the first one would be 1586.60. And so gold is trading on a 30-minute basis with inside its 30-minute profile out here. So it's trading in between, it's consolidating between support and resistance. It's below Stevie's red line. It's suggesting that price would want to move lower. A close below 1625 would then really bring that 1586 level into play. So that's really what I'm seeing as we speak. What we also know is gold held a real key level of support out here, and that's its weekly time frame, TD setup breakout level. So when price was pulling back in the 1465 and people were wondering, well, why did it find support there? Well, it's because price really came back to an area that it had broken out. And so I used the TD9 counts to establish those breakout and breakdown levels out here. So that area is held, and the weekly chart really doesn't look too bad just yet, or right now. It's just trading in a range, a large range, 1700 to basically 1465.
Was I seeing correctly that it looked like you had up there a moment ago the gold in some different currencies? It looked like, or at least in different areas, that it might have been, weaker in those as well. Was I seeing that correctly?
Yeah. So here's the chart with the gold in the four major currencies: dollar, then euros, yen, and pounds. And really, what I was saying there to ask your question, hey, is gold going to pull back or is it going to break out? And because in each of these currencies, it got back to its highs. In terms of euros and yen, actually got above the highs and then gave it up. And same thing, in essence, in dollars, although it didn't get above the highs out there. These charts here suggest that we're in this consolidation-ish type pattern, and very large consolidation, as you pointed out, 1700 down to the 70-ish type area out there. It is pulling back in terms of pounds, but man, I wonder if I can do this. I think I can do pretty much anything, right? I'm in control of the charts out here. I'm going to just put it on a monthly basis. And so, you've got gold expressed in pounds at new all-time highs ever. Well, at least it was yesterday. It's just, it's pulled back a bit out there. So, yeah, that's what I see when I take a look at gold price in the other currencies.
Okay, well, thank you very much, Steve. Just be safe and take care of yourself. And
you bet.
I'm planning on talking to you soon, I'm sure. Just, again, always appreciate your work and what you do. Take care.
You bet. So thanks for the call. That was Brent in Martinez, California. Let's go out to Robert in Kansas. Robert, thanks for calling. Thanks for holding. How are you?
Well, thank you, Steve, and I wanted to thank you specifically for being on the air and giving people encouragement. If you watch the news, you can kind of scare the bejesus out of the people, not only for the financial issues that are going on, but just the health. And so I think it's very encouraging to see, somebody like you on the air, and that it didn't wipe you out having the virus, that you're might have in the shin, but you're not out. So Well, thanks for those comments. I nicknamed myself Stevie Perseverance Rhodes a long time ago. So the other thing my dad taught me was it's not how you fall, it's how you get back up. And the proof, and he didn't just, he taught me a lot of things by example. And I will give you that example before we go to break, and then we'll come back to you. I was about 16 years old, just over 16, was going out on my first date. He sent me up to the store, said, you need to go get a belt and a pair of slacks. And I came home, and on the way home, I got rear-ended by a driver, totally demolished the car. I was fine. That evening, that was when I had the date, he gave me the keys to his car, and he said, you get back out there and get back up on that horse. It's not how you fall. It's always how you get back up. This is Steve Rhodes with TFNN. We'll be right back with Robert in Kansas.
If you're in the CD market and looking for secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Let's go back out to Robert. And Robert, did you want to look at the semiconductor index by the SMHs?
Yes. It's really a general question that applies to the semiconductors and the QQQs as well as probably about any other of the S&P. Mm-hmm. My question is, isn't it reasonable to believe that, when we think we're at a bottom here, that even if we are at a bottom, this isn't going to run right back up to the top, that there's going to be some retracements along the way, and it's not going to be, the elevator is not going to go straight back up to the top floor.
Possible. So yes, that's a possibility. But we could also in the semi. So further your thought. Put your thought into a question. I mean,
my question is it's not necessary to, there's a fear of missing out, necessarily run in there and buy it today because there's this emotional knee-jerk reaction that Congress, the Senate and the House are going to pass this. The president's going to pass this $2 trillion stimulus. It might be. It takes us away, moves us up a little bit in the market, but then 2 or 3 days later we get a retracement. It's going to be the typical lightning rod on its way back up to the top.
Sure. So let's go with let's carry that thought through to the charts from a technical standpoint. So thanks for doing that. So if we were just going to use the SMH ETF out here, in fact, I'm going to just do that even on my other charts. The first thing that we know is that the next resistance level, and this is where you would expect, if we go with your thought process, where price would run into resistance and then pull back, the first resistance level should be the bottom of its daily profile, what it is trading below right now. So old resistance or old support may become new resistance. We don't know if it will or not, but it's very feasible that is a possibility. And that level is 122.32. You're at 120.14. So if the question was the risk reward would now be a time to enter into the semis based upon that thought process, the answer would be no. Because that box, the daily box, left-hand panel on the screen that we're looking at, folks, is bullish in nature. When I mean bullish in nature is the center line. That's the cyan colored at 127.85, closer to the bottom than it is to the top. It's also, what I also have seen is if price can get above 122.32, it's really trying to get up to the 127.85, where both buyers and sellers believed that there was fair value with inside there. If price were to get above 127.85, then the thought process was wrong. The conclusion, I would say, would be, was wrong, and that price is going to make a run up to where it had last broken down. And specifically inside the SMHs on a daily basis, that's at 132.73. Did this form a valid bottoming pattern? It did. On the lows of March 18th, that was a TD9 count bottom. The very next day, price was actually moving lower, doing less relative energy because of my 5-step process. That generated a bullish engulfing candle. There's your second bottom. And yesterday, the gap up above Stevie's red line said, okay, I'm back in a bullish formation and should at least run up to the 132.73 area. So I would say with regard to the general market out here, it goes back to their TAS market profiles on a daily basis. The ES mini is now above its top of its box at 25.40, closing above that today, would suggest that the slingshot that we're seeing here should continue. But I still believe that the NQ, which had been the strongest, it has been the weakest so far today, weakest from the standpoint of being able to close above the top of its TAS profile. That's what, in essence, is being tested right now. So I think you have more information and a better idea at the close of today's session. And then tomorrow, even one day's close above that doesn't make it all. It really, from my standpoint, it's 2 days above that. And so I'd be watching 77.60 basically inside the NQ. So when I put it all together like that, is that making some logical sense?
Yeah, it is. It seems like your perspective is that the slingshot will continue, that you're going to wait for information to validate that.
Yeah, yes, I do think it continues, but I also, I know the way that the markets make their best bottom from an intermediate term standpoint, and that pattern hasn't played out yet. And that pattern, if I'm correct, I don't know that I'm correct out there, says that we get to another lower low in the markets. But it says we don't really get there until about the first week in May. It doesn't have to be the first week in May. It can be the first week in May or later out there. So that's just got to take this one day at a time. The markets are bullish. The markets are bullish worldwide. The markets are bullish right now worldwide. They're not bullish worldwide because they've been rallying. They're bullish worldwide because of the patterns that you and I use to help us identify tops and bottoms. And we can go take a look at the Nikkei. That confirmed, here's the Nikkei as an example. That confirmed a TD9 count bottom, was bar number 8 that made the bottom. This wants to head to 21.06, so you got a nice bottom there. The Hang Seng gave us the confirming bottom signal today. That had a TD9 count. Today, price closed over 22.881. That was important. Price headed to 26.408, or that is the message of its market right now. The Shanghai has got a nice bottom in place, just slightly closing off. TD9 count here as well, Rhodes momentum indicator pattern in today's close just above Stevie's red line. So that is signaling a bottom to us. The FTSE out here, the FTSE has had a nice Rhodes momentum indicator bottom, a wave number 7 bottom out here. This is suggesting a rally up to 67.05 out here. And if we take a look at the DAX really doing the same thing. So we could go take a look at every U.S. market. We go take a look at international markets. This is suggesting that there really is more legs to go out here in the marketplace. Another thing that I take a look at out here, Robert, is I use the same tool. This is kind of like the TD9 count tool, but I use it in a different way to understand where normal counter trend rallies should end. And this is kind of a 2-bar method out here. You'll see some numbers out here, 1 and 2. I've turned out the one down, the ones to the downside out here. But if this were just a knee-jerk reaction, price really should close today back below 24.53. I am not saying that's going to happen. And we can take this same chart out here, and I go back to the 2007, 2009 time frame, if I can Here we go. So here's where in 2008. And what you will see is that using that same tool out here, price rarely closes. Any of these counter trend rallies were just that, just counter trend rallies, as price was never able to clear those resistance, those green line levels. When they did pass through resistance, even during the 2007-2009 timeframe, price continued to move higher for a few more days out there. So, it looks like more of a rally to come, but we'll just have to see what the end of the day brings. All right, Robert?
Thank you. I appreciate it.
You bet. Thanks for calling. That was Robert in Kansas. Steve Rhodes with TFNN. We come back from this break. Let's go take a look at Tesla for someone in the...
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
All right, let's see if we can get this in the next 2 minutes out here. Top dog in the Tiger's Den wanted to look for an entry point into Tesla. So the reality is the entry point, we can see that here. Tesla on a daily basis formed a TD 9-count bottom. And again, folks, you want to really... It's a simple pattern. You don't have to be major technician out here. So go subscribe to Mastering Probability if you only do it for less than 30 days, so you get the free trial. Allow me to teach you some tools that you'll be able to apply to your instruments that you want to trade out here. But it formed a TD9 count bottom. The confirmation of this bullish move is taking place today as price gets above Stevie's red line. That would have been where the counter trend rally ended, such as yesterday. It touched that level, didn't get above it. As long as price stays above that area, 512 and change, then price should head up to 707. So the buy point out here would be a retest of that 512 level. So I hope that helps out with regard to Tesla. Michael H. wants to take a look at SPCE, Spice Girls out here. Actually, I believe that's Space or something like that. And seeking to begin buying small blocks for long-term investment out here. Why didn't that take? SPCE, there we go. Just got to type it a bit harder. So with regard to this instrument, you're looking for entry areas. This forms a TD9 count bottom. Price above Stevie's red line. Its resistance level breakdown area is 24.34. So where's your buy? It could be now. It could be at 15.39. That's Stevie's red line out there. Do the math, the reward risk out here. 24.34 is the number. You're talking intermediate term time frame. And what price did, it made that space move shot to the upside. Not a surprise to you or I that it tops with a TD9 count. It was the bar following bar 9. And then price pulls all the way back to where it had broken out on a weekly basis. And so your weekly breakout area was 898. It got down pretty much right to that level, Michael, out here. On the weekly basis, 1906 is the hurdle that it has to clear in order to continue moving higher. So I hope that helps you out. Craig wanted to look at the GDX. My apology, Craig, we didn't get to that. I'll go ahead since there's two more that I didn't get to. I'll respond to you personally since you took the time to write in and I didn't get to. Folks, stay tuned. Watch that price point of 77.60 inside the NQ. We'll be right back. See you later.